Which is the better dividend stock to buy, 3M or Raytheon Corporation, or better known as RTX right now? I'm going to answer that question in this video, looking at the company's dividend yield, revenue, operating profitability, cash flow, and valuation. So let's jump right into it. 3M offers investors a dividend yield of 6% at 5.99 to be exact, and RTX is about half of that at 3.04%. So if dividend yield is your primary interest, then 3M is significantly in the lead in this metric. The next thing I wanted to compare these two on is revenue over the trailing 12 months. And what I want to see is there any noticeable trends, upward, downward, volatile, those types of things. And I do notice a few things here, namely in RTX, I notice some volatile swings in revenue, but it has been growing nicely in recent years at 70.57 billion, and given the Russian invasion of Ukraine and the increased importance of military budgets, I believe RTX has excellent prospects over the next few years. 3M, meanwhile, has experienced a flat revenue over the last decade, and in recent years, 2 or 3 years or so, 2 years I would say, revenue has been coming down a bit. Remember, 3M sells a lot of products. It has a lot of inputs into other products, and so when people are buying things, 3M benefits. And so remember, in 2020, 2021, when we were spending more time at home, people were spending more on things, and that benefited 3M significantly. You can see that nice upward tick in revenue. However, since the economic reopen has gained momentum worldwide, people are unleashing that pent-up demand to just get out of the house, go out somewhere, go to a restaurant, travel, go to a theme park, spending on services more so than things, and that's been hurting 3M. And so that's bringing its revenue down in the last couple of years. The next thing I wanted to look at is operating profitability over the trailing 12 months. And one thing jumps out at you is the big drop off in 3M's operating profitability. The company has been paying billions of dollars to settle lawsuits, and that's been hurting its operating profitability. Although interestingly, it hasn't been hurting its cash flow, and I'll explain why in just a little bit. But namely, the reason is because when the company makes these settlements, let's say they make a settlement for a lawsuit saying they agreed to pay $8 billion to settle some claim, right? That $8 billion is usually the headline figure, but the company more likely gets into an agreement where it'll pay 800 million over the next 10 years, or maybe even 400 million over the next 20 years. They'll make some kind of settlement where they're going to pay out that money some point, the majority of the money some point in the future, but they'll take that write down immediately. It'll help them offset their taxes right now. So they'll take the profit loss right now because that loss is a tax benefit for the company. So they want to take that immediately, but then they want to pay out the cash as slowly as possible because that's not a benefit to the company, right? Getting rid of cash. So they'll try and slow that out and spread that out as long as possible, and they'll work that into the settlement negotiation, getting them that favorable payout terms. And that's what 3M's been doing. If you read some of the information regarding their settlements, there's been those kinds of deals being placed, and it's not uncommon for corporations to make those kinds of deals. RTX, meanwhile, profit margin has been coming down also. Used to be closer to 15%, now it's down to 8.51%. Rising inflation certainly playing a toll here for the company as costs are increasing, and it's still fulfilling orders from contracts it made several years ago, and so its revenue, its prices are based on a few years ago, but its costs are based on the most recently updated prices. So it's not in a favorable position in terms of sales prices versus costs of goods sold. The other thing I wanted to look at is cash flow from operations to sales. And you'll see here, 3M solidly positive, right? Compared to their negative cash flow from operating profit margin because of what I mentioned about the settlement of the lawsuits. So 18.87% in the most recent trailing 12 months compared to 7.46. And for the better part of the last decade, 3M has comfortably been ahead of RTX in terms of cash flow from operations to sales. And finally, I wanted to look at valuation, and 3M is trading at a cheaper valuation at a forward PE of 10.31 compared to RTX trading at a forward PE of 13.72. And given the better performing metrics for 3M in cash flow from operations and operating profitability, if we exclude the impact of the lawsuits, I would go with 3M as the better dividend stock to buy right now. Even including the risks from the lawsuits, I would still go with 3M. I'm incorporating that into my analysis for deciding between which one of these two would be the better dividend stock for me to buy today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.